new success to all of you. All right, before I continue, can I see some heart shape or thumbs up from all of you? All right, wonderful. So happy morning. First of all, congratulations to all of you who make it here today. So this is the new year, right? First step is to pick up and learn about this new product. As you can see on the screen, today's product briefing will be the Eastspring Investment Short-Term Bond Fund. All right. So this definitely is able to enhance your product solution for your customer. And who will be briefing all of us here this morning? It's none other than we have invited Miss Serene Wong. Yeah, Miss Serene Wong has turned on her camera now. So she's the Senior Manager for Strategic Sales and Digital Distribution. So if all of you have any questions after she guides us through about the product, do ask in the chat box and we will pick it up later. And after she do the briefing on the new product, and I will brief all of you about the new class for the Japan Dynamic Fund, okay, which is the unhedged class, and as well as a reminder for all our sales campaign, right? So without further ado, so let me pass the session to Ms. Serene Wong. Over to you.
Hi, good morning. Glad to be here today. Okay, today I'm here to brief you about Eastspring Investment Short-Term Bond Fund. Okay, the fund, we launched it on the 15th of January 2025. Okay, so it's an existing fund. You can actually log into My Eastspring and you can see it's actually available for your investors. Okay, then first of all, I would like to set the tone correct that this fund is actually really meant for high net worth individual or corporate investors. So if you have this kind of investor, right, it's actually a good fund for you to try to talk to them, get the opportunity to present to them, and you can just contact all our RM that they are more than happy to join field with you to meet the corporate investors. Okay, short-term bond fund, the name itself, right, is actually tells you we invest in the short-term bond itself. Okay, the fund is actually designed to offer a low-risk investment option with the potential with higher returns compared to traditional FD. Okay, you probably think that, I thought we have money market fund will have this similar function. Okay, so short-term bond fund rate is something that in between money market and bond fund. Okay, short-term bond funds rate has recently gained significant interest among corporate investor and high net worth individual, especially after the government imposed taxes on money markets. If you remember a few years back, right, money market is actually non-taxable. But after back to 2 years ago, government decided that, okay, corporate, you have enough of placement. You cannot take on the tax benefit. So you have to invest in the money market, we so-called Class C. So this is where corporate investors, right, start to look for investment options that are higher returns compared to saving accounts and FD. At the same time, they are also cautious taking on the risk associated with traditional bond funds, means the long-term bond fund or like something like Eastspring bond, because due to the corporate investor shorter placement tenure. Because some of the money, right, they probably just want to put there for 9 months, 12 months, 16 months, 18 months. So money market is taxable, so they opt for the second best option will be the short-term bond funds. So this is where the short-term bond fund come into place to address the gap in the market. So it's a gap for you to tap on for corporate investor or high net worth individual investor for the shorter tenor kind of placements. Okay, so the fund are designed to provide a balance between higher interest rate and lower risk, making them an attractive option for corporate investors looking for safer investment vehicle. So by investing in short-term bond funds, right, corporate can enjoy better return while maintaining a level of security that align with their investment strategies. So how does it work for our investors? So first thing, you look for investors that are potentially looking for higher return. Okay, because short-term bond fund will provide a higher return compared with FD placement, and is also tax exempted because for corporate clients, right, money market are taxable, but for bond fund, short-term bond fund, right, is actually tax exempted return for capital appreciation and income distribution. So this is an important note. At the same time, right, corporates or high individual net worth, right, they are actually concerned about risk, because for individual, if they want higher risk investment, they will go for equity. So this kind of money for individual to place in, right, will be those low risk that they don't want to take any risk, but they want higher return compared with FD. So it's a lower risk kind of investment. So invest into short-term paper, which is lower risk compared to long-term bond and equity. At the same time, right, short-term bond funds are usually less sensitive to interest rate movement. So if there's any cut rates or increased rates, right, short-term bond fund will be the one that impact the less. Okay, at the same time, right, corporate, they are concerned about credit risk management. So this one, don't have to worry, leave it for Eastspring Investment, because we have the whole team of fixed income team to sit there and just to analyze the risk and to choose the best option for our investors. So this will be the best why corporate investor and individual investor, they invest into short-term bond fund. Okay, then you probably wanted to know, does it make a really big difference if I have a money market, right? Then a short-term bond fund and bond fund, how does it actually differentiate? How can I choose the best for my investor, or how would I know that which one is my investor is actually looking for? Okay, there's a lot of ways. Some of them are actually concerned about risk, some of them concerned about return, some of them concerned about the placement return. So I would say that for you, right, the easiest way to find out is on the placement tenant, means that the investment horizon. If you have investor that looking for placement that less than 1 year, probably you would recommend them for money market. If they are looking for like 9 to 18 months or 2 years, then probably short-term bond fund will be a better option. Or if you want something, corporates, they are actually looking for long-term investment, then we can actually recommend them for bond fund, which have placement greater than 3 years. Okay, once they decided what are the tenants they are looking for, everything will come into place. Okay, if you want a placement which is less than 1 year, you go for money market, means that you have lower risk and you have very high liquidity, because money market only plays into FD, so lower risk. At the same time, anytime they can redeem T+1 redemption. Okay, very low sensitive to interest rate, which is suitable for conservative investor which need high liquidity. So reason for investment will be preserve capital with very low risk and high liquidity. So this, if your investor are looking for tenant less than 1 year, so go for money market. Okay, if you have an investor that look at, I probably want to put like 9 months, 12 months, 18 months, then probably short-term bond fund would be an option for them, because the risk will be low to moderate. It's actually lower than bond, but higher than money market. Okay, so the liquidity will be moderate, sensitive to interest rate will be moderate, and for conservative investor or retiree, this will be an option for them, and it preserves capital while earning a higher return than money market. Okay, if they are looking for long-term investment bond fund, but they don't want to go into liquidity equity, then bond fund will be the best option for them, which is moderate to high risk. At the same time, the return, of course, is higher than money market and short-term bond fund, and sensitivity to interest rate, because we are taking the advantage of the duration and also the credit risk. Then of course the risk is they are more sensitive to interest rate. So these are more suitable for investors that are seeking higher returns compared to short-term bond fund and money market, but they want to take a lower risk compared to equity. So bond fund will be a better option for your investor. So this table actually tell you how can you differentiate what kind of investment that actually suit into your investor, or what can you recommend to your investor. Okay, probably you think that money market and short-term bond fund or FD, the difference for each interest rate, right? You probably just 1% or 1.2% difference. Okay, not much different, right? Yes, it doesn't make a big difference if your investor is only invested for 1,000 or 2,000. But if you have investor, or especially corporate investor, you are looking for 1 million or 10 million kind of investment, right? The 1% will actually make up a big difference. 1% for 1 million is actually 10,000. for a year, and 1% for 10 million is 100,000. So 100,000, does it make a very big difference or not? 100,000, I can buy a car. I can buy a Honda Civic. I probably can make a down payment for a city center condominium. So 100,000 for high net worth individual is actually quite a lot if they have 10 million for placement. So to give you an example or to illustrate how does we calculate? Okay, I give you an example of 1 month FD, 12 month FD, and short-term bond fund if you place for 1 month and 12 months. Yeah. Okay, 1 month FD, the interest rate 0.2. So net return for corporate investor, right, is actually 0.15, means annualized 1 year is about 1.82%. So if a corporate investor placement for 10 million, right, then net return for 1 month will be 15,000. But if you put in short-term bond fund 1 month, the return is 0.34%. There's no tax for corporate investor. So the annualized return per annum will be 4.08%, which is make up 34,000 for 1 month placement. So 15,000 and 34 is almost double of the return already. Okay, let's say if corporate investor, they put for 12-month FD. 12-month FD, right, the interest rate of the coupon that they receive is 2.63. After the 25% of tax is actually the net return is only 2%, which make up a 2% of return for 1 year placement. 2% compared to 3.79 because short-term bond fund is tax exempted for income and also capital appreciation. So all in all, right, 12-month placement for a corporate for 10 million is 199,000, while for short-term bond fund is 379,000. So it's a difference of 180,000 118,000 difference. So it's really a huge difference. So how about for individual investor? Okay, individual investor, right, they have more option because for corporate investor, right, they cannot take on the placement risk, they cannot take on equity risk. But individual, they have. But for individual, high net worth individual, for 10 million difference, right, it will also make up about 100,000 of difference. Okay, for a rich Tai, right, 100,000 enough for them to get a new Hermes, probably Birkin bag already. So 100,000 still make a lot of difference for individual to pick into placements. So these are the difference why short-term bond fund exists in the market and why there are a lot of investors actually looking for this kind of products. Okay, so just a quick introduction into Eastspring Investment short-term bond fund. So the bond only invests in minimum 60% of the NAV in debt securities and maximum of 40% into money market instruments, deposits or cash. So these are the risks. So there are investor profile for this product will be those investors who seek for steady income streams, have low to medium risk tolerance and adopt a short to medium investment horizon. So it's a quarterly distribution. So I guess a lot of investors are concerned it's a quarterly distribution, and the benchmark is FD, Maybank 1 month FD rate. Annual management fee is 0.3%. Okay, and this is actually a retail fund. So the initial investment for all investor corporate, whether you are corporate or individual, is 1,000. Regular investment is 100, while top up is 100. Regular investment is 100. Okay, if you are placing via My Eastspring for individual, then will be 100 also for initial investment. To give you a glimpse of the portfolio, if we start out the fund with 100 million investment portfolio, right, then the portfolio itself, right, the model portfolio that the fund manager has make up will be year to maturity duration will be the yield will be 3.97%. Average duration will be 1.45, which is in line with the short-term bond fund objective, short-term investment, which is 1.45. Then we'll have 6 placement, number of issuance, minimum rating is A plus, average rating is AA minus. So it will comprise of almost 20% of the investment is in less than 1 year paper, 39% into 1 to 2 years, while 31% into 2 years, more than 2 years placement. So this will give the investor a range of portfolio alignment because they have different maturity at the same time enjoying different yield, which this is the benefit of invest with a fund manager because we have big amount of money and we can stagger the payment, we can stagger the investment, and the same time the interest rate will come in, we enjoy the short-term liquidity and long-term bond kind of returns. So this is how we segregate the portfolio. At the same time, okay, just in case you realize that your investor, they probably want to make a different kind of bond placement, then do remember to recommend them that Eastspring, we do have a Eastspring Investment Islamic Income Fund, which mirror to the money market features that I present to you just now, and Eastspring Investment Short-Term Bond Fund, which is I just present. And we also have a Eastspring Investment Bond Fund, which will give you an average yield of 4.24%. So from here, right, you can see that the yield, the shorter it is, the lower it is, the higher the duration, the higher yield that you can actually get for your investors. So this is how we segregate the Islamic Income Fund, the short-term bond fund, and also the bond fund. From here, you have a basic idea that how can or what should you recommend to your investors. Okay, then I would like to introduce you our Malaysia fixed income team for Eastspring Investment. So we are actually managing one of the biggest fixed income team in Malaysia, a USD of 4.8 billion. So in ringgit Malaysia probably is about 24, 25 billion of fixed income. We have 6 investment professionals for Eastspring Investment, and we have additional 2 for Eastspring Investment Awara. So in total, we have actually 8, and with average years of investment experience, more than 14 years. And the team currently is led by Mr. Lam. Mr. Lam took over the head of investment from Eileen. Eileen retired 2 years ago, which she served us for more than 35 years. So Mr. Lam is the new joiner, but it's also not new anymore. So it's actually more than 2 years. So it's led by Mr. Lam Chong Guan, and the fund manager for Eastspring Investment Short-Term Bond Fund is actually Mr. Hussein. Hussein is actually joined us back to year 2020 as the fixed income manager, and he will be managing this fund. Okay, the fund currently has already live, is live already. We have a corporate investor already. We have a few corporate investors already invested into the fund. Okay, so in all, it's a fund that's suitable for corporate investor and also high net worth individual. The liquidity for the fund, right, is actually T+3. Why T+3? Because we want the liquidity also. We cannot give you the same liquidity as the money market fund T+1, but short-term bond fund are still faster than the normal unit trust fund, which is the T+3. So another key benefit for the investor will be, compared to placing active, there's actually no penalty or redemption charges, means that they can actually redeem any day or any business days, and they can get the money with T+3. So these are the products that actually cater for our high net worth individual and corporate investor. So which will include the money market fund, the Eastspring Investment Islamic Income Fund, Eastspring Investment Short-Term Bond Fund, and also Eastspring Investment Bond Fund. So I'll end my presentation. I'll pass over to Amanda.
All right, thank you so much to Serene for the wonderful sharing. So I guess all of us are now clearer on the product recommendation, depending on like what Serene mentioned, depending on the bond tenure. So if they are looking for really short-term less than a year, so definitely go for money market, but especially for the corporate investor. So take note, as Serene mentioned, the demand arises when corporate investor, they are looking for a product that is also lesser or lower risk, but as tax exempted, yeah. So which is the best solution would be the short-term bond. That's why people are looking for this new product right now. All right, so let's look at the questions that that have sent in. I'm pretty sure it's very clear. So yeah, some of you are asking on whether can you get the PowerPoint slides on certain product feature. So I don't see there's any issue. So after the training session, you may ask it from your respective RM, and we will send the compliance approved slides for all of you to use, so that you can present it to your customer. All right.
Yeah. Do take note that when you present to your investor, right? You probably would like to invite our RM to join field with you. They will probably for corporate investor, it will actually give a better impression to them and hope that you have a higher chances. Okay, then I have questions that does it mean that the fund does not pay any tax at all? Okay, the tax, and also I have that tax-free or tax-free. So I would, the better way of saying it, right? Okay, first thing, in the whole unit trust industry in Malaysia, except for money market fund for corporate, only distribution for money market fund for corporate investor are taxable. The rest of the bond fund, equity fund, capital appreciation, and distributions are all tax exempted. You can actually find the letter from the master prospectus and also prospectus of the fund.
Page 237 to be exact.
Oh, you see, Amanda, remember it clearly. So it will tell you is actually tax exempted. It's actually written there, tax exempted. So don't have to worry about it.
Yeah,
Okay.
and basically, if you please go to the website to download the master prospectus. You can refer to page 237 as mentioned by Serene. Then you are able to read, now it's under single regime tax, and the tax is all paid by the fund itself already. So when it comes to unit holders or investor per se, other than the money market distribution, which is subject to the corporate investor, the rest, capital appreciation, distribution income, all these are exempted already. Yeah, you can refer to master prospectus. So should you need more clarification, you can also refer to your RM.
Okay, I also received questions. Has the fund has any sales charge? Okay, for the short-term bond fund is zero upfront, no sales charge. We only charge 0.3% of management fees, because these are the money that come in very quick. So it also act for as a parking facilities. If you have investor that they just exit the equity funds, or they can just park inside, then of course you may ask me why no sales charge. Okay, for corporate placement, it's quite common that no, all the funds are no sales charge. So what's the earning? Where the earning coming from? I think for you, the earning will come from the management fees. Okay, because you probably think that it's too small for you, but if you have a corporate investor that come in 20 million, 50 million, then the management fee for 1 month itself is sit there also can buy back already. Enough for you to buy an LV bag already.
Okay, thank you, Serene. Okay, there is a question that asks which corporate that have invested into this fund. I think due to PDPA, we can't tell which company that have invested into this, our short-term bond fund. Another thing is when Serene mentioned about, since there's no front-end sale charges, and as agent, your concern is, then I might as well don't have front-end commission. So what do you earn? You earn from the trailer commission. So imagine, even though the trailer commission, the annual management fee is charging 0.3% annual management fee, you will get about
0.1012.
Okay, about that. So you are still earning trailer commission. So depending on what type of the customer, so definitely this is a very sought after product by the corporate. So now is a good news whereby they can do placement and invest into this short-term bond, lower risk than conventional bond or the equity, and they can get tax exempted. So I don't think, imagine when there's the big money coming in, your trailer com also very gao, very thick as well, huh? Okay, so there's other question like what is the minimum investment amount? Maybe I'll take up this question as mentioned by Serene earlier. The minimum investment amount is as low as 100 ringgit, even though it's a first timer, but need to go through the My Eastspring. So minimum 100 ringgit and no maximum. When did we launch this fund? This fund we have launched it
15th of January.
15th of January, sorry. Yeah, 15th January. It's already in the My Eastspring. You can start promoting to your customer. We have already launched it since 15th January 2025.
And no login period. So they can come in for 3 months, 6 months, 9 months, 12 months, 18 months.
Yeah, so no login period like Serene mentioned, meaning anytime, and there's no exit charges. There's no exit fee. Yeah, zero fee come in, zero fee go out. It's just annual management fees that charged by the fund.
Reflected in NAV already.
It's already reflected as NAV as usual. Yeah.
Okay, if no more questions?
Maybe probably you still need some time to digest on this fund, but to me this is a pretty straightforward type of product. So after this, if you have any further question, please don't feel shy. Please go reach out to our RM and ask them on this product, this material, yeah, so that you have it on your hand and you can readily promote to your customer. Okay, so once again, thank you, Ms. Serene Wong, for the wonderful session. And now it's my turn to do the sharing. Allow me to share the slides. Let me pull out the slide.
Take over.
Okay, can you all see my screen? Big enough? Okay, wonderful. All right, so I'm going to take this session very fast and short and sweet. So first of all, I now have a new title called the Business Development Manager. So together we are going to grow unit trust business together with Eastspring to a greater height. Okay, so all right, next. Sorry, besides the short-term bond that we have launched on the 15th January this year, basically we actually have launched another fund that with a new class, okay? Japan Dynamic. I'm sure you all have heard about our Japan Dynamic Fund. So Japan Dynamic Fund on the 31st of January, which is last month, we have launched the new fund class, Ringgit Malaysia class. So now we have two, yeah? So I'm going to explain to you what's the difference of these two. The original that all this year we are having is called the Japan Dynamic MY Fund H. Okay, all this while we have the H class. Now, last month we launched the UnH. So when you want to differentiate the fund prices or in the My Eastspring, so we have now Japan Dynamic H and UnH. Okay, one with the word H, one without the word H there. Without the word H means UnH. So what's the difference? Why are we launching a new fund class that is UnH class? So meaning UnH on the currency. So the difference is there's a demand. So for especially people that love or they believe that Japan yen is going to rise, is going to pick up, right, going to increase, that's where the UnH class will actually earn higher return. So basically, the original H class are more for people who do not want to take any currency risk, meaning if yen go higher or lower than ringgit Malaysia, they don't want a bigger impact. So all this while, the existing Japan Dynamic Fund is a H class. Understand? So that's where you'll see on the, let me put the laser pointer. So on the left, H meaning already hedge on the currency risk. So Japan yen up or down, higher or lower, is less impacted. Okay, it's less impacted. But now with the new UnH class, it's offer another kind of like depending on people risk like me, I straight away invested already because I have faith myself, personal opinion, don't quote me, I have faith with Japan yen, so I invest in. So that's where when a person choose the ringgit class, which is unhedged, meaning I am also willing to take whatever the currency movement. There's no hedging for here. Okay, so next. In terms of return, for the hedge class, because it's already hedged, so it's less influenced by the currency movement. All this while the hedge class definitely memang less influenced by the Japan yen up or down. So if client invest in the hedge class, so the currency risk will be minimized. But for risk taker that love the currency movement is another excitement like me. So fund return can be higher if ringgit, not ringgit, if yen is higher. If yen today strengthen against the ringgit, so the return of this fund will be higher as well. So basically, the investment strategy, asset allocation, all are the same. The difference is these are the difference that I'm mentioning, the changes on the Japanese yen. Of course, on the another end, if the yen weaken lebih weak than the ringgit Malaysia currency, so this will also be impacted. So hedge less influenced by the currency movement. Unhedged, you're able to enjoy the potential return if the yen is higher. So what about the risk? Definitely for the hedge class, are protecting investor against the currency fluctuation. So you don't need to worry about the volatility of the Japanese yen. So if your client is concerned about the fluctuation of Japanese yen, they can choose the hedge class. But if they love it, they want to expose to the currency risk, so then they choose the unhedged class. Like I mentioned, you are looking forward for the potential return if yen strengthens. On the another part, you must also have investor accept the risk of currency fluctuation for the downside as well. And lastly, because it's a hedge class, definitely in terms of fund management, fund manager have to pay additional costs like buying the forward contract or options for the hedging part, right? So that's where there is a certain cost involved in that. But the unhedged class, there's no hedge, so no additional cost. That's where people who choose for the non-hedged classes are actually lebih jimat sikit lah in terms of the funds management there. Yeah. So I hope that everyone is clear about the Japan dynamic hedge and unhedged. Any questions so far? Okay, no question. Pretty simple. So like I said, look for customers who love Japan market. Yeah, and now you have a two different class depending on their risk appetite. If they favor Japan yen, then go for unhedged. If they don't want the risk, they don't want to stomach the risk, you go for the hedge class. Okay, so next up, before we call off for the day, very quickly, I will want to, hold on now, why it's not moving. I will want to bring you all through the sales campaign that we have launched last month during the Jumpstart. So if all of you or any one of you that have attended the Jumpstart, it will be a good refresher for all of you and to power up all of you to pick up the momentum. So let's very quickly go through the recruitment. So for all of you, please take note that Eastspring target for agency is 3,500 agents. Okay, by end of this year, we aim to have 3,500 agents with us. What does it mean to us? So how do we achieve it? Very simple. Each and every one of us, now we have about 1,007 agents. Each and any one of us bring one person. We refer one person come in. Okay, we refer one person come in, and by year end we would achieve 3,005. And with that, with 3,005 agents, what does it mean to us, or what does it mean to you as an agent? Definitely, if that happened right, in terms of branding, we are there. when people say, yo, besides after public mutuals, the top number biggest, right? The second is Spring Investment. And that time, if you want to do recruitment, if you want to do sales, you want to promote to your customer, everything, when the branding is there, everything will be so much easier. So let's together work it together and make this come true. Okay? Even an agent, if you can't recruit, but now you can refer with our tag campaign. I'll explain to you later. So like I mentioned, when the branding is stronger, when the branding is there, in terms of publicity, it's so much easier for us to do sales and recruitment. Okay. And we have also come up with this 9 strong reasons why you should be a unit trust agent, especially from existing PAMB, PBTB, the group there's so many existing agents. Why should they also take up this unit trust license? I hope all of you should have a copy of this 9 reasons why to be a unit trust agent. Use this copy, make sure you have a copy of it. If you don't have it, ask from your RM. Take up this copy and use it. 9 strong reasons why they should take up the license. Okay, so I won't go through very detailed. You must have heard from us before during the jump start. If you are yet, you can read on your own or ask your RM. Okay, like I mentioned, tag. We are launching this campaign tag 28, meaning we want to attract the group of talents. Yeah. Why tag 28? Meaning if now, let's say you are an agent, you just joined us, you are an agent. So you will say that to do sales, to go to our EAC is so difficult. But now you have a chance. No need to do sales, you can still go to EAC trip. How? You just need to refer. Do you have 28 friends? So if you are so strong in convincing and getting them to join us, take up the license, refer 28% to join us, you are on the trip with us, yeah. So definitely, like I say, everyone can refer, not just the UM or AM, even agent can refer, especially the Zen market that you want to tap into. So get them in, tell them, come in and learn about the investment market, okay? Okay, so besides that, we also have offering this new joiner fees waiver for new joiner who join us. Within 3 months, they pass the exam and do 10,000 ringgit sales. We are reimbursing the 210 ringgit exam fee for us. So first come, first serve, cepat. And this is the campaign for ERC, new rookie. Any new agent who join us here today, new agents meaning you just passed your exam last year, you are still in the run for ERC. Anyone? Can I see a raise of hand? 有吗? Any ERC here today? No. David said no. David, bring more new agent comes in, okay? Yeah, bring more agent because this is, you can't find it outside. Only Eastspring offers such a wonderful incentive offer, which is 50% off from our normal EAC campaign. And besides that, besides our EAC trip, so if the agent also achieve a minimum of 250,000 EPP, they can earn a travel trip worth 3,000 ringgit. 3,500 ringgit for them as well. So these are all the good, I say the whole Kang Tao, good Kang Tao for the new joiner. Okay, other than that, for Reach, this year our goal is to do 21,000 Reach account. So very easy. So when we have 3,005 agents, okay, each agent do 6 Reach account. 一整年12个月, 12 months you only do 6 Reach account, yeah, let's say. And every 2 months you do 1 Reach account, right? So basically it's just 6 for a whole year, and we are there. When we achieve the 21,000 Reach account, and each of it is 250 ringgit, that's when the company every month will have a 5.25 million recurring sales every month, and 1 whole year we will have a standing instruction, kind of like auto sales coming in 63 million a year. Okay, and Reach for EAC. So if you can also do this together, yeah, definitely by referring people as well as closing Reach account. So this year we are offering not just Reach Fund Reach account, we are offering just normal Rich Fund also can, so long it's a new Rich account. Okay, and if you want to do it all the new Rich Fund account, it's just the Rich Fund. So to get an EAC ticket, only 80 new Rich Fund account. Okay, so let's say if we want to, other than Rich Fund, if we want to do it small cap or growth fund or Islamic small cap or maybe China fund or Japan fund, so you can do it, but you need 120 new Rich account for that. Okay, of course you can have a mixture of it. We are counting every we're giving more point for Rich Fund, 1.5 points. If let's say you close 40 Rich Fund account, so you will have 60 points already, right? So remaining you just need to do another 60 Rich account. So don't worry about so much on that. Every month we will have report. You just go out, close as many accounts as possible, and get our RM to keep track with our RM through the report. Yeah, how many you have closed and etc. And we still have Rich Plus for agents' own contribution to Rich Fund with a minimum of 250 ringgit. We are giving you almost the 80% of annual management fee. And the Rich Kids is a very good tool for you to get your client to come in that join with a kit to invest for free. Okay, good tool for you to close sales. And on sales growth, we are aiming to have 840 million sales this year. So how to achieve that? Each and every one of us to bring in monthly 20,000 sales. 20,000 sales regardless say EPF or cash investment. With that, with 3,500 agents, we are there, okay? And this is the campaign that we have launched, the fast track. You got to move fast because now it's like today is 18 February. You still have about 1 month plus to go for this fast track of 888,000 EPP point to go for our Egypt. And another campaign that very good offer, 0% hero. So we are offering this to existing Prudential policy holder who are not Eastspring investor yet. They can invest at 0% sale charge, but up to 50,000 ringgit. Okay, you can offer a 0% sale charge to your Prudential policy holder who are non-Eastspring customer yet. Even we are charging them 0%, we are still giving you 0.5 EPP for the sales. So this is definitely a good news. Okay, for more details, terms and conditions, you may refer to our channel bulletin or you can ask our RM. So all in all, people, this is the summary of the campaign. And Egypt, this year we're launching Egypt at a very achievable or a cheap or I don't say cheap, a low EPP, yeah, which it has we all keep mentioning. Do you know that you can't find other than Eastspring, you can't find other UTMC out there that is offering such an affordable EPP point. There are some company out there, they are offering to do 1,688,000 to just go South Korean, yeah. Where else, Ellen? To go South Korea, Shanghai, do 1,600,000 to just go Korea and Shanghai. And 1688 in the past we have brought you to like Russia, Tuscany, and a lot of those Europe country, yeah. And this year 1388 only, we are bringing you to Egypt. Some more with the fast track by end of March. If you have 888,000 EPP points, you are there to Egypt. And for ERC, yeah, ERC, you just need to do 694,000 EPP, which is 50% of the usual one, or the Rich for EAC, Rich account. Please go and aim for it, set goal to do it. Please don't think that it's impossible. So since we launched Rich for EAC last year, we already have a number of agents who have achieved it. So it's definitely achievable if you really go out there and do it. Okay, and definitely none other than, the Recruit for EAC, first time, and you just need to do recruitment or referring to agent and you are there. Any questions so far? I sounded like too fast, but this is just a reminder session because all of you would have heard about this during Jumpstart. Okay? Okay, can I share? Okay, this is someone asked, can I share about the training in the, can I share more about the training in the eConnect? Okay, so this is sidetrack a little bit, yeah. So some of you would have read the email about we have launched some e-learning in the eConnect. Okay, we have the e-learning, but currently I have closed it because there is some bugs that when agent log in through the mobile apps, when you click in, there are some iOS phone couldn't click on the assessment link, but Android no problem. There are also some phone that log in through the mobile apps, can watch the video, but some can't see the video just with the sound. So temporarily, we actually have so-called on hold it, yeah, until my developer are able to fix it. So when can we fix it? I don't have the date yet. I don't have the confirmed date when this will be fixed, but soon we are definitely going to open up again. Actually, through the web login, everything are good. It's just that for mobile app, if they log in through eConnect, there is some error to certain phone design, yeah, phone version. So we need some time to fix it. So for Rachel, for your questions, if you're asking on the e-learning in the eConnect, so temporarily we on hold it. But if you are lucky, you're able to register it before I close it, right? Before I close the seats to 65, you're one of the 65, you can go to the web login to perform it and complete it. Okay, Rachel Wong. So do I answer your question? Yeah, like Julia, you have registered for the ACE for 28 February, right? That is actually a self-learning, that's a self-learning session. You just need to click on the check-in, get on the link, and watch the video, complete the assessment, and do checkout. You don't have to wait until 28 February. If you are managed to register it, you can do it on your own. Read the guide. I actually have come up with the guide for the e-learning, the step-by-step image. Please read the guide. If you don't have the guide, you ask from your RM. The guide should have emailed to all of you together. Yeah, it's in the attachment of the email. Please read the guide. The rest who are unable to register yet, stay tuned. Give us some time. Let us fix the bugs in the mobile app first. Yeah. So I think there's no more questions. Okay, I hope that with the new product, short-term bond, are able to open up another channel for you. If you know of any corporate that are looking for product solution that also can get tax exempted, don't need to pay for the distribution that they get from the money